What's up, YouTube fam? Welcome back to the channel. In this episode, we're going to just discuss the position we have currently, what we're looking at for this week, and just some tricks you can use for your selling options journey. So obviously you could see we're up $324 on the day. If you watched yesterday's video, you would have seen, what I was talking about in terms of this position. Like, we've been in this position for, I think, since Wednesday or Tuesday now, and I was explaining how we anticipated theta, where is it, right here, would give us, our gains going into today. So obviously it gave us an extra 324 from where we were at yesterday on the account. So if you want to see how that worked in real time, go watch yesterday's video to see where the account was at and now look at it today. So with that being said, I did discuss some positions we planned on taking this week, but I guess in the meantime, we might as well talk about our current position. So MSTX right now, as you can see, our strike price is 75, right? So let's drag this up a little bit. We basically are just hoping it doesn't get to here by Friday. Now, with that said, I don't intend to hold this till Friday. I probably will only hold this until tomorrow, if that. I'm a little concerned right now because I see Bitcoin and the crypto market is just, it's definitely reaching that point where it's kind of a do or die moment. Obviously, it's been trending up, but at this moment, it's either going to push for the next leg or continue back down and give us the retracement. And if we do get that retracement, then MSTX is going to fall hard. So I'm watching it pretty closely right now because I don't want to get stuck losing the gains and watching this position fall. So I'm highly considering closing it very soon. I just haven't fully decided yet. So I'm going to keep you guys updated. Now, in terms of the other positions we've been discussing, we're looking at Chewy this week due to its earnings. The one thing that's made me a little nervous about Chewy is obviously we're in a clear bear trend right now, which makes me believe that when earnings comes out Wednesday morning, it could easily fall down hard. Now, we don't have to rush because the premiums are going to hold their value until earnings, right? So if we pull up the Chewy premiums, you'll see they're up very good right now, right? Like, these premiums are extremely high. And this always happens before earnings. Now, someone did comment, since you're taking it play on earnings, what happens if it falls? And I've covered this many times. A stock like Chewy, it's only going to go 10%, 20% max. And I'd be prepared to handle that, right? If my account, well, first of all, right, let's just discuss first of all, is the share price right now is at $33, right? So if we're taking a $30 strike, first of all, we're giving ourselves close to 10% of leeway, right? That's the first order of business. The second order of business is, what's the worst that happens? It falls 20%. A stock like Chewy is not going to go down much more than 20% after an earnings play. You have to be prepared for your account to take that kind of hit temporarily if you're going to sell options. At this point, we're at, just in the last 3.5 weeks now, right? So since we started this challenge, we're up 16%. Now, keep in mind, we would be collecting premium as well. So if we did lose 20%, it would be 20% minus premium, which would make it, closer to 10%. Now, the other thing to keep in mind, again, is since we're selling puts, we're avoiding all of this loss, right? If our strike is 30, then it falls, let's just say, to 27. We're avoiding all of this, and now we're only taking the loss that would be from here all the way down to whatever the doomsday scenario could be, right, down here. So, the first order of business is if you're going to sell options, you always have to be willing to take the risk, right? So if you're really so worried about an earnings play, then one, just don't take it, or two, don't use the whole account, right? Like, at this moment, I don't have my whole account in this position. I have 9,000 worth of buying power. I'm debating opening another position right now, whether it's with MSTX or a different ticker. I haven't decided. The point is, you're a trader. It's an art form, right? You have the ability to do it how you want to do it. So if you don't want to take earnings plays because you don't want to take the risk, don't. If you don't want to risk your whole account, don't. Now, this isn't buying an option, right, where it's going to go to zero. Even if it did dump all the way down to here, you're still holding the X amount of shares and you could just wait it out. And that's kind of the premise, right, is when we do these earnings plays, we're taking stocks that have had good financial reports and good history. Something like Chewy, it's like if you look at the last 1, 2, 3, 4, 5, 6, 7, right? If you look at the last 8 earnings, it's beaten it on 7, right? And if you do more research into their financials, it's safe to say they're a stronger company, right? We're not playing earnings on penny stocks. We're not playing earnings on stocks that are very questionable. We're playing earnings on stocks that have proven to last the test of time. So it's a lot to consider, but ultimately that's why we're doing cash secured puts. Now again, I'm still waiting. I'm going to probably wait until tomorrow to take this position. Now the other position we discussed in yesterday's video was DocuSign, and it's the same exact concept. And this is how you're going to get the most money possible selling options, right? First of all, we're doing volatile stocks, ultimately like MSTX, right? MSTX is MicroStrategy, but on a 2x leverage and cheaper. So what does that mean, right? If we look at MicroStrategy, right, it's currently sitting at $380 a share. You know, most of us don't have 38,000 in the account, but MSTX is at 95 a share, which means we would only need 9,500 to trade this. So, you know, it's a lot easier to come across 9,500 than it is 38,000, right? So that's why we're doing MSTX, and ultimately MSTX is an extremely volatile stock, which is giving us great premiums, right? If we want to trade, you know, right now I have the 75 open, so I've already collected all the way. So I got in this position and the premium was at $6.50, right? So I've already collected all of the loss from 650 to 235. But if I wanted to open up another position, you know, let's just say here, it would be another 470 I can add to the premium collection. Now I don't want to do that right now due to the fact that it's just going down, right? Like I think 75, you know, is a good distance for now, you know, for the rest of this week. But I don't want to add right now until, you know, maybe if we see this hold and we see Bitcoin hold, right, and Bitcoin make that leg up. Now, you know, when you're trading a stock against another asset, you want to see the stock you're in beating that asset, right? So like, for instance, when you look at MicroStrategy or MSTX, I don't like that right now this is in this range while Bitcoin looks like it's making a bigger move up, right? You don't want to see, you know, if you're trading a crypto stock, the easiest way to put it, right, is you don't want to see the stock you're trading, the chart, look less bullish than Bitcoin, right? So like, it was the same thing with these miners, right? I've been considering trading the miners, and I pretty much have stayed away from them. I think I've taken one position, but again, it's like, overall, the miners have not looked impressive comparative to Bitcoin. So it's made me very hesitant to take plays in them, because why would I want to trade, you know, put it this way, right? If something that is a crypto stock is looking less bullish than Bitcoin, then what do you think is going to happen when Bitcoin pulls back, right? You see this. You see how bad this looks at this moment, right? And it's because, you know, Bitcoin's getting red, right? Bitcoin is always eventually going to pull back. It's a very volatile asset. So if you're going to trade a crypto stock, you know, you want to see that stock outperforming Bitcoin. So it's like, at this moment, obviously, I'm a little concerned with this position. Now, the beautiful part about selling options, right, is time is in your favor. So since I've been holding this since Wednesday, and this has already lost so much value, it's going to take so much for it to reclaim that value. And that's why it's not as worrisome for me. Like, if I see it completely dumping, then yeah, I might have to just get out. And even at this moment, I'm considering just getting out because it just doesn't look great. And again, since MSTX's chart is losing comparative to Bitcoin at the moment, it makes me question why I would want to hold it, right? So this is some food for thought. I'm just thinking out loud for you guys. Now, you know, in terms of the other positions that we wanted to take, right? And again, this is how you're going to make the most money possible. You know, hypothetically, let's just look at CRM. How much is CRM? I don't even know, but let's look, right? Okay, so CRM is too expensive for my account. I didn't really know. But, you know, again, if you want to get the most money possible, it does take some risk, right? And when it comes to selling options, you know, I know other people that might sell options and teach it aren't going to do these types of plays. So it's like, if we look at, let's just say Marvel, right? Now, I would have to do more research into this company to, you know, want to sell options, especially on an earnings, you know, report. So it's a dividend stock. It looks like it's beaten earnings a bunch of times. I'd probably want to do a little bit more research. I like that it gapped up here. That shows to me that it's strong at the moment. Now, being that this has earnings tomorrow, right, what I hypothetically could do is, I mean, honestly, if we want to get really crazy, right, what we could do is we can close out the MSTX play today, right, then take CleanSpark, right, because CleanSpark has earnings after close this tomorrow, assuming it goes our way, then take this the next day, then close this. Now, we wouldn't be able to take the Chewy play because Chewy's before open, but you see what I'm trying to say? It's like, you know, we're taking volatile plays, we're taking plays pre-news because because the premiums are so jacked up. Now, is there going to be more risk inherently when you're doing this? Of course. But in a lot of ways, this is still going to be much less risky than buying options, than, buying shares, because since we're selling cash secured puts, again, look at the line of where our strike price is on MSTX, right? So, the way selling options works is you can close the position early, but if the position goes in your favor, right, you get a gain, and if it goes against you, then you take the loss. So what does that mean, right? Let's just refresh for a second. In this position that we're currently in, right, if we hold it all the way, we'll collect 650 times 2. So we would collect 1,300, right? And we could simulate the returns. So assuming we hold this all the way to expiration, we collect 1,300. Now, when it comes to this, right, this will tell us where we would be at if the price was at a certain place. So let's go to $65. So if it expires at 65, we lose 700. Why? Because it's 200 shares. So it's 200 times by, hold on. So yeah, it's 200 times by 10, which is 2,000. But then since we're collecting 1,300, we lose 700, right? So if it was at 65 right now, we can close this and be down 1,400, if that makes sense, right? So basically it gives us the option to close early, to either take a smaller gain or take a loss. But the point is that as long as we don't close early, we're always collecting the premium, and then we're just buying at the strike price. So what I'm trying to get at is cash secured puts will always be safer than almost anything you can do, right? Because if you just go ahead and buy it right now at 95 and it falls, then you're taking all of that loss from here to here. If you bought options, then you could lose the whole position, right, with no return. Where if you're doing cash secured puts, you're collecting the premium, and let's just say it does something like where it falls down to here, all right, you're going to be down a couple bucks, but then it shoots back up. And that's the moral, right? Is like, none of us are wizards. None of us can time the market perfectly. All we can do is try to take positions that make the most sense, that are going to be the safest and make us the most money over the longest period of time. And that's what I want to stress on this channel. As someone who's been trading for years now, I know what it's like to make quick money, because ultimately quick money, you lose it. I know what it's like to buy and hold and make money over the long term. And that's obviously one of the best, if not the best way to go about the markets, right? It's just dollar cost averaging into stocks you can trust and holding them. But, if you're someone who's looking to make consistent income, cash secured puts is 100% the best way. And then, if it does expire down here, now you're holding, you could either start selling covered calls or hold it until it comes back way above your strike, right? Because the thing about selling covered calls right after you get in is, of course, if it goes too far, then your strike can be below your entry, right? So really the best way is you sell cash secured puts. Let's say it gets down to 70, then it comes back to 75. Now you sell a covered call with an 85. So this way you can make all the gains from 75 to 85 while collecting premiums. So that's how you're going to make the most money with selling options. And if you want to get really crazy, you take some earnings plays and then close them out, take the next earnings play, right? So it's like, if we want to get really crazy, we take Clean Spark, right? Well, let's just say hypothetically, we close MSTX, take our 7,800 that we're up, take Clean Spark, right? We sell a put on, let's just say the 13. Let's see, how much can our account afford? So let's say 16. It's like, hypothetically, we close the 800 for profit, take this, get 640. Then let's just say Clean Spark goes in our direction, right? And we don't know what it's going to do with earnings today. Let's see. The earnings on Clean Spark have been good. Every crypto stock has definitely lost, but it's like, I think it's safe to say it's going to beat earnings this quarter, because obviously just the things that crypto has done over the last couple months, or month even. Now, let's just say it does go our direction today after close, right? At that point, these puts would basically be worthless, right? So the 600 would be pretty much ours immediately. So at that point, we can close it tomorrow and then take the Chewy earnings. Now, I might even just not do this and do Marvel tomorrow. I don't know yet. But then you have Wednesday Chewy, Thursday DocuSign. You see what I'm trying to say? It's like, if you're someone who doesn't trade options, you're only thinking in terms of expiration, right? You're going to make 630 by Friday. Once you start to actually do it and you understand that you can close these positions early, It's like you can take the 780 from this one, then make 600 by CleanSpark, then make another 600 from Chewy. So that's 780, 600, 600, and then another 700 from DocuSign. All of a sudden you're doing 10, 15% in a single week off, a $20,000 account. You're making $3,000 in a single week. Now, is this type of opportunity going to come every week? No. And is it sometimes going to go against you? Absolutely. But if you're trying to grow your account the fastest way possible and the safest way possible, maybe this isn't the safest way possible, but I'm talking, the combination of speed and safeness, right? Because it's very hard to have the two. It's usually one or the other. And this is, in my opinion, the best combination of the two. So I hope you got a lot from this video. I hope you guys enjoyed it. Make sure to like, comment, and subscribe for more content. And let me know in the comments what you think. Let me know stocks you want me to look into, and I'll be happy to do that. Anyway, I'll see you guys tomorrow for the next video.